Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency, and we're going to start with the euro dollar. So basically, we wanted to see the reaction here of price at this resistance fib to see if it's going to break to the upside or if there will be a bearish reversal. And so far, I don't think it's looking like a reversal. I think that the pattern is looking corrective, like a flag, bouncing off the 21 EMA. That does not look good, too good for the bears, to be honest. And price is not showing any kind of impulsiveness to the downside. So I am leaning towards a breakout to the upside if price can push above the previous top, above 121.50. I think that there could be intraday setups on the 15 or 5-minute chart from this level up to the WIS5, and perhaps once it breaks that top up to the WIS6 at 122.25, maybe even going up to 122.50 or even further, 123.25. That's if we get a break of top, a break of WIS5, break of WIS6, taking it step by step if there is a break. If there's no break, of course, then price could always react and reverse at any of these targets. So from my perspective, if it breaks through the 21 EMA zone, and more importantly probably the 144 and 23 EMA, then we're looking at a bearish breakout down to the 610 EMA in the previous bottom, and if we get a continuation down to 120, the minus 272 target, and perhaps even further down towards these fibs at 119.70, 119.20, and maybe even 118.40. That's if we get a push below the 144 EMA. On a 4-hour chart, let's take this away. Basically, what I was thinking on Wednesday is that this is looking like, well, maybe just a quick look at the 1-hour chart still, that this is looking like a wave 1, 2, 3, 4, 5 pattern of A, where we get an ABC up, and that we should see then a down for C. That's what was my main analysis on Wednesday, although I wanted to see a reaction here first to confirm that. Now, we did get the ABC up, so that's good. That pattern played out. But the thing is that we're not seeing a very strong reaction here. So that is, as I already mentioned, so that is why I think that now a bullish scenario is probably a bit more likely. But if we get the break below here, that could still take place, an ABC pattern to the downside. If we get a push below the 21 EMA on a 4-hour chart, for instance, that would be another confirmation. In that case, it seems that 5 waves have been completed. 1, 2, 3, 4, 5, probably of a wave A, and we're getting the A, B, C of a wave B. And that red ABC of the blue B could go far. We can put it, the fib from here to here. And it could easily go down to, for instance, the 61.8 fib here at 118.90, for instance, or the 50 fib, and bounce at that spot. All right, even the 38.2 fib at 120 is a bouncing spot. Any of these 3 fibs basically could be a bouncing spot. Let me get rid of this fib so you can see that more clearly. Okay. So let's see if we get that reversal. There is a potential. I'm not saying that my analysis from Wednesday is fully out of the window yet, because there is a potential head and shoulders pattern here. That could play out. We do have a 5-wave pattern completed to the upside. We see plenty of reasons for price to make a bounce here due to the fib as well, like this. And you can see that it was very close to the 78.6 fib. So it could easily make an ABC pattern like that. And then correction, and then down, for instance, like that, to retest the previous bottoms. Okay, so I wouldn't rule that out. But what my main analysis, or my main approach, is basically to wait for the breakout. In this case, maybe the bulls have a 60-40 edge. Maybe it's 50-50. So that's why I'd rather wait for a break below the 21 EMA zone on the 4-hour chart. We can also wait for a break of this trend line. But I think the 21 EMA break should be enough, to be honest, for a bearish breakout. Or look for that break on the 144 EMA on the 1-hour chart. It's about the same. Or if it breaks to the upside here, this space between the WIS levels could confirm the bullish breakout to the upside. And in that case, we're probably looking at a continuation of some sort, maybe even on the 1-hour chart, a wave 1, 2, 3, 4. It's a very deep wave 4, but that could also still be a wave 5 of A, for instance. Okay, so break up or break down, that's the main motto from my perspective. Whether it goes up or down, I think it's about 50-50, just because, yes, we have a strong uptrend, but we're also quite near resistance, so I don't have any clear favorite at this moment. Slight edge maybe to the upside, as I mentioned. All right, now let's take a look at the pound USD. Let me get rid of all these lines, and let's review it again. I think that looking at the weekly chart, we're looking at the weekly candle number 11. So I don't think it's the right time for breaking above this top. I don't think it will break this top. Statistically, looking at time patterns, the odds of a bounce are higher, at this moment at least. So I think that this is more of a dip pullback for more downside to retest the previous support zones rather than a sustainable breakout. That's just based on time patterns, simply said, my view on the weekly chart. And I think that it's probably completing a wave A, B, C like this. So I am leaning towards a bearish downside. Sorry. On the 1 hour chart, we already said that this is a very strong resistance zone and that a bounce is likely. Based off of the fib here as well, we said that we're really at a very deep Fibonacci level, 88.6 fib. So based on that, we said on the hourly chart there should be a break below the 21 EMA zone, and once that happens, price should go back to 140. That's what happened. We had a bounce at 140, but the bounce up seems quite corrective at the moment. But in general, I think although I'm more bearish on the pound dollar than the euro dollar at this moment, I do think that here too a breakout is justified and it's a better approach than anticipating the break. In this case, I thought it was different because the resistance was so strong, I thought a bearish bounce was likely. So to me, a bearish trade in this zone made sense, even without the confirmation. Waiting for the confirmation, which was the 21 EMA break, was also good. As you can see, plenty of space down to 140 still. Now, I think that we're looking probably at a 5-wave down here. For an A, this looks like an ABC up for B. And I think that the breakout could confirm a wave C. So if that happens, if you get the breakout to the downside, price should go down to 139.60, 139, maybe even down to 138.40, and perhaps even as far as 137.50. All right, in that case, we can see price basically going back to the previous range zone that we saw the last couple of 2 months, I guess, or more, where price was kind of oscillating sideways here. And price, I think, could go back to that zone with this breakout. Now, if it does move up by any chance, we are still looking at a hefty resistance zone. And I think that price could reverse at 141.70, which is the 88.6 fib again, a second time. So even if it moves up a tad, I think that reversal trade ideas at the double top, to me, make the most sense. Now, the euro pound, I think, looks bullish at this moment. So it could explain why the pound dollar looks more bearish than the euro dollar. Both have certain bearishness in them. But with the euro dollar, as I said, it looks like 60-40 or a 50-50. With the pound, I'm leaning towards more downside, either on the break or maybe at the double top. Just looking at all these patterns, to me, considering the divergence between these tops, I think a bigger correction to the 144 EMA on the daily chart after 5 waves up with the divergence pattern, with the weekly time pattern for at least this and next week. I think the odds of price going back to eventually even as far as the 144 EMA here on the daily chart seem to have the best odds and best probabilities. So the breakout once again with the double top to me, or double top at the 88.6 fib, looking like the best bearish trades. And that's it for now. So that's my update. Today we'll be back on Wednesday with a review of how things went and of course new analysis. We'll have a live webinar, 2 live webinars today, 1 tomorrow. So check out elitecurrency.com for those free live webinars where we update and give our extra analysis and extra thoughts and questions you can ask, of course, about the waves. We have an Elliott Wave webinar. Neneth has his weekly trading ideas. And tomorrow we have our automated trading webinar plus just general Q&A. And of course, you can find a lot more at Elite Currency with our ebooks and our articles, research and education, our live daily updates about the market. So hope to see you there and wish everyone great trading. Cheers, bye-bye.